Here are the crypto top headlines covered in this video. VanEck files Fifth Amendment to spot Bitcoin ETF under HODL. Next, real-world assets, crypto's latest big buzz. But is it truly here to stay? Also, macro conditions, ETF Optimism collide at the right time ahead of Bitcoin halving. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, VanEck files Fifth Amendment to spot Bitcoin ETF under HODL. Analysts say the ticker code could help avoid negative attention on advisor statements. Asset manager VanEck filed a Fifth Amendment application for a spot Bitcoin exchange-traded fund on December 8th. According to the regulator's database, the amended filing to the S-1 form with the United States Securities and Exchange Commission highlights updates to the VanEck Bitcoin Trust. A spot Bitcoin ETF is an investment vehicle that lets people buy shares in a fund that tracks the price of Bitcoin. The VanEck ETF is now expected to be listed under HODL, which is a misspelling of hold, for an acronym for Hold On for Dear Life. Bitcoiners use the phrase to describe a strategy of buying and never selling the digital asset. VanEck's ticker symbol for the spot Bitcoin ETF got the attention of analysts on X. Nate Garachi, president of the advisory firm The ETF Store, commented that people familiar with crypto will appreciate the ticker, except boomers who won't understand it. He said the ticker would help avoid negative attention on advisor statements, as many advisors already advocate hodling in different asset classes. According to Eric Balchanis, a Bloomberg Intelligence senior ETF analyst, the ticker symbol choice differs from the more boring boomery choices other companies like BlackRock and Fidelity go for. He suggested that the ticker symbol choice is a unique approach by VanEck. VanEck itself also got in on the fund by posting a comment on December 8th. My @Bitcoin ETF will bring all the baby boomers to the yard, if approved. Several companies, including BlackRock, Fidelity, VanEck, Valkyrie, and Franklin Templeton, are in the race for an approved spot Bitcoin ETF. While the SEC hasn't indicated its support for the filings, it has engaged in recent discussions with representatives from the applicant firms to address technical details in their fund proposals. VanEck anticipates SEC approval for a Bitcoin ETF spot in January and estimates $2.4 billion in inflows in Q1. Our next top headline, real-world assets, crypto's latest big buzz, but is it truly here to stay? The crypto industry has come a long way since the ICO bubble of 2017, when two schools of thought existed. Digital currencies were the next big thing, or an outright scam. Nowadays, you won't find many opining that crypto is the next big thing. With a global market of $1.5 trillion, isn't it already big? As for those claiming it's an egregious scam, many have gone to the ground while others appear increasingly tone-deaf as a slew of institutional heavy hitters enter the Web3 space. One of the most talked about buzz topics in crypto, particularly as the asset class has started to mature and blockchain adoption has increased, is the tokenization of real-world assets, or RWAs. What if traditional investments, property, art, gold, oil, treasuries, luxury watches, could be tokenized and added to the blockchain? Wouldn't these tangible goods enjoy all the attendant benefits that people rave about when discussing Bitcoin, Ethereum, or USDC? Namely fast settlement, cross-border simplicity, transparency, and security? Bringing RWAs to blockchain. RWAs are not a modern phenomenon. The concept of swapping the trading of paper for wallet addresses has been around since the ICO fervor of 2017. An article published in NASDAQ in March of that year outlined the various benefits to be gained from tokenizing RWAs, noting the significant overheads of the Web 2 TradFi systems that facilitate business using the old model. Naturally, the industry has moved forward in the intervening period. Indeed, the price of BTC more than tripled between 2017 and 2021, while the likes of Tesla, MicroStrategy, and amazingly the government of El Salvador have since added billions of dollars of crypto to their balance. Moreover, the emergence of the decentralized finance, or DeFi, industry and its trustless financial protocols for trading, lending, and saving has multiplied the use cases for digital assets and brought a flood of investor capital to the party. DeFi did not really exist when RWAs were first discussed in 2017, but recent chatter about real-world assets invariably references the sector since it will inevitably be the DeFi protocols, among others, that add support for RWAs to their interfaces. Indeed, it's already happening. Decentralized networks like Centrifuge enable the tokenization of assets such as royalties, invoices, and real estate bridge loans, while Ondo Finance has its own US dollar yield token, USDY, a tokenized note secured by short-term US Treasuries and bank demand deposits. With DeFi yields having fallen dramatically since the days of the surging bull market, the prospect of tokenized RWAs presents a new possible source of yield in DeFi, giving holders of fine art, commodities, equities, derivatives, precious metals, and property a chance to leverage their liquidity to earn a return. Why tokenize tangible assets? The benefits of RWA would, to be sure, flow in both directions. The arrival of established asset classes to DeFi, which is often seen as a Wild West for investors, would bring stability to the industry while strengthening its credibility. Billions of dollars worth of crypto liquidity would also flow into RWAs, and top-performing digital currencies like Bitcoin would suddenly represent an alternative form of collateral for tangible assets. Moreover, more businesses would be exposed to DeFi and the prospect of tokenizing real-world assets into fractional ownership. An investor interested in buying property, for example, might be unable to afford a mansion, but if that mansion was divided into 500 tokens and its ownership distributed among a network of investors, it could suddenly become workable. The same is true of a supercar, a yacht, a Cessna. You get the idea. At the recent Digital Asset Week in London, several leading global financial institutions, including BlackRock and Standard Chartered, outlined their plans of action in the Web3 space. According to Forbes fintech reporter Lawrence Wintermeyer, one topic on the agenda was the tokenization of precious metals, property, and private markets, a subject that was coming back into focus after a lull for a few years, driven by higher interest rates. According to Wintermeyer, private protocols and networks will absorb RWAs as public protocols may not stand up to scrutiny of the many jurisdictional laws and regulations. So, what needs to happen in order for real-world assets to become a meaningful economic driver for Web3, as opposed to riding the hype wave before peaking and flopping spectacularly like JPEG NFTs before them? Well, the current implementations of RWAs in the wild will have to be deemed a success, lest institutions sour on the idea and return to their old, reliable way of doing things. Existing implementations include JP Morgan's Tokenized Collateral Network, or TCN, a private blockchain app that allows the tokenized representation of collateral assets, such as tokenized money market fund shares, to be transferred on-chain. In October, the TCN facilitated its first transaction between BlackRock and Barclays. Elsewhere, HSBC has launched its own gold tokenization platform, HSBC Evolve, enabling institutional investors to acquire tokens representing physical gold, as well as silver, palladium, and platinum, held in its London vault. Of course, precious metals have already been tokenized by a number of platforms, including BitGuild and Pax Gold, but the arrival of a major player like HSBC into the industry is yet another endorsement of blockchain for investors who tend to shun crypto in favor of the Web 2 sandbox. Whether tokenized on Web 3 native decentralized protocols or private networks created by TradFi bellwethers, real-world assets are making their way onto blockchain at a rapid rate, amid growing institutional interest from institutions like Fidelity, Santander, and BlackRock, and a strong desire for yield amongst investors disheartened by DeFi's falling rates. RWAs seem destined to continue gaining traction. Little wonder Boston Consulting Group expects the on-chain RWA market to hit $16 trillion by 2030. Our next top headline: macro conditions, ETF optimism collide at the right time ahead of Bitcoin halving. Analysts say the bull run for Bitcoin is beginning. Cryptos extended their rally Friday as stocks traded sideways. Analysts say the bull run for Bitcoin is beginning. Bitcoin was back in the green Friday after a slight dip Thursday. The largest crypto was trading around $43,700 at time of publication after briefly surpassing $44,000 yet again. Ether was trading mostly flat Friday, but maintained its monthly gains of nearly 25% over the past 30 days. As 2023 comes to a close, Ether is up around 95% year to date. Equities posted mild gains, with the S&P 500 and NASDAQ Composite indexes gaining around 0.2% each midway through the trading session Friday. With Bitcoin's next halving slated for April 2024, coinciding with a potential policy shift from the Federal Reserve, investors may be in for the perfect storm, Thomas Perfumo, head of strategy at Kraken, said. This is going to be the fourth halving, and pretty much every single one has kicked off a bull cycle where the top has come in about 18 months or so after the halving event, Perfumo said. This halving is special in the sense that you're going to have inflation in Bitcoin circulating supply drop below 1% for the first time in history, he added. That's basically crossing that threshold that gold has historically served as this kind of bellwether sound currency, where the supply growth of gold is something that's been north of 1%, but very steady and very low single digits. The catalyst for the rally, which has seen both Bitcoin gain more than 56% since the start of October 2023, was optimism about a Bitcoin exchange-traded fund finally hitting the market in the U.S., Luke Nolan, research associate at CoinShares, said. People are front-running what they believe will be significant flows stemming from the potential launches of the ETFs, Nolan said. If the SEC approves a spot Bitcoin ETF, there is a stamp of approval for the asset class from the largest capital market regulator in the world. As traders wait anxiously for the first ETFs to hit the market, Perfumo said the rally for spot Bitcoin prices shouldn't stop there. That's positive for prices generally speaking, Perfumo said. What I mean by that is one of the biggest barriers for the U.S., specifically when it comes to investment, has been the accessibility of crypto in retirement accounts. Having crypto in a securitized format via an ETF, which is a very commonly understood product nowadays, even by consumer investors, I think that's a really powerful statement. JTO, the governance token for Solana-based staking project Jito, made its debut via an airdrop Thursday. Close to $110 million was up for grabs when the airdrop hit Thursday morning, and by Friday, JTO was trading more than 180% higher than its initial price of $1.20. Solana, apparently riding the JTO wave, posted gains Friday as well, up more than 11% over the past 24 hours at time of publication. If history repeats itself, what you tend to see is the smart contract platforms pick up, and then the dApps and whatnot that are subject to higher levels of volatility because they're smaller assets in general tend to follow, Perfumo said. I can definitely see a situation where Bitcoin leads into a cycle for Ethereum, Solana, and some of the other alts. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.